All right, welcome back to Yahoo Finance Live on this Wednesday morning. Let's take a look overseas at a couple stocks on the move there. Let's start with Deliveroo, the company last week coming to the public markets in a bit of a rocky debut. Stock stabilizing a bit, but now pressure on the company from its drivers. Yahoo Finance's Oscar Williams-Grut joins us now for the latest on that story. Oscar.
Well, Myles, there were a lot of nerves coming into today for Deliveroo. Today is the first day of unconditional trading for the company, meaning retail investors can buy and sell the stock. Now, around 70,000 bought into the IPO at the 390p share price. But of course, last week we saw the stock fall about 30% on its first day of dealing, and it settled around the 280p mark. So a big fall there. Thankfully, though, for both the company and banks like Goldman Sachs and JP Morgan, which worked on the float, we haven't seen a rush of retail investors try and offload the shares. The stock's up about 2% today. There are still big questions over the company's future, however. The Financial Times reported yesterday that Goldman Sachs was forced to buy around £75 million worth of the stock to try and prop up the price last week, which accounted for about 25% of all the stock traded in the first 2 days. Now, institutional investors have largely been overlooking this stock due to concerns about the way it treats riders. And as if to highlight this, in fact, to highlight this, drivers have today gone on strike saying they want minimum pay and better working conditions. Clearly, this is a stock to watch, so we'll be watching carefully to see where the price goes from here.
And speaking of stocks to watch, Oscar, you're also looking at Ryanair. We've been watching airlines closely and just everything travel closely over here as well. Ryanair out with an update on its numbers, given the sort of pace of reopening and pace of people getting back to traveling.
That's right. And really what's happened here is the profile of the outlook for the industry here in Europe has changed. Ryanair have said that in the short term, things look slightly better. They narrowed their range for what they expect to lose this year, trimming it by about 100 million euros. They now said they're expecting a net loss of between 800 million and 850 million euros, down from, on the top end, 950 euros, which is the previous guidance. But the airline warned that the slower rollout of vaccines across Europe and the cautious sounds coming from the UK government on international travel mean they expect next year to be worse than they forecast. The airline said that it's not possible to provide a meaningful profit guidance, but they do not share the recent optimism of certain analysts and expect to only break even in 2022. Still, investors are focusing on the short-term good news. The stock is up about 1% here in London on the day.
Oscar, you guys still locked down? I was thinking about this.
We are, but we're slowly coming out of lockdown. Next Monday is the next milestone when we are all non-essential. Retail is opening, outdoor dining and restaurants, and crucially for me, we're going to get hairdressers open again. So this will start to look a bit more reasonable in a week or so.
All right, there you go. I'm newly trolling the vaccine registration website, and you're planning a new haircut. Different speeds here. All right, Oscar Williams-Grut over in the UK. Appreciate the time this morning.